Hey everybody, hey traders, Chris Pulver here, just after 4 o'clock, just after closing bell on September 12th. Happy Thursday. We had a pretty quiet day in the markets today, but it was just the melt up that continued from yesterday's momentum with that big intraday volatility from CPI. I'm just calling that the excuse. But what I think is interesting is the S&P has nearly come all the way back to the post Labor Day sell-off. Not quite there yet, but within a bit of a whisker. We have about 0.47% to reclaim that sell off. And we're not that far away from, I mean, realistically, all time highs. Now, of course, everything is going to happen next week with the Fed. Are they going to cut rates? Most likely. How much? Probably 25 basis points. I'm looking at, we're about a 1.3% move away from all time highs. Uh, look, we could get there. We really could. I thought if the market today was a little bit of a stall, then the bulls would show a little bit more hesitation than they really did. So, I mean, price action I see is just continuing to support this bullish theme for right now. Obviously, the Fed can throw some cold water on the party. If we have something to the effect of just another melt up going into next week, or even if price is very quiet for the remainder of the week, we will see. Of course, the week still has to close tomorrow, so I'll be looking at that price action tomorrow, and as well as updated videos. But if we just have a huge rip from Wednesday and a drift up today, Friday might be a little bit quiet. Friday might just stay in here with a little bit of hesitation. And I think this would be kind of the perfect window to go in with complete indecision with the Fed coming next week on Wednesday. So that gives the market a chance to pop to the upside, a chance to, fall to the downside, and there's going to be risk either way. I'm actually very curious how I decide to play that because, overall the portfolio benefits from going to the upside, and that's fine, and that's super, super easy. But in the interim, if I want to make some income plays, I might actually position for some type of wider butterfly spread, which allows me to maybe capture some type of peak profit if somehow price just stays in the middle. But that's difficult to time. And if I went out to, maybe a Wednesday or Friday of next week, maybe I have to go a little bit wider. But I'm curious what that looks like from a risk reward standpoint. And so I'll address that maybe next week in my trading. But basically, I think we're at a perfect spot to just prove the market's got to make a decision, right? The bulls can step in and continue this momentum and get all excited that the rate cuts are finally here. I don't really know what the Fed would say to ruin the party outside of the Fed says, look, policy is time to change, but there's been improvements on the inflation front. We're still very concerned about employment news. This is still going to be data dependent, blah, blah, blah. Look, the employment news was terrible during Labor Day and that week after Labor Day, but yet the market is right back where we started. So I think, it's either volatility, and it goes back to what I've been mentioning here the last couple of weeks, which is I think there's still a lot of indecision where we may struggle to break the highs, we may struggle to break the lows, and just don't be faked into going all long if we're not going to see a convincing breakout. So I'm watching, very closely on the near term. I'm not necessarily picking tops or bottoms, but if we come up here and we have any type of rejection there, I'm probably going to throw on some bear call spreads and get some type of directional play that maybe takes us back down into the same highs and lows that we've seen here the last couple of weeks. But that's more near term. Long term, obviously, if we just keep pestering this high and pulling back and pestering this high, then we look at the bigger picture. Okay, well, to the upside, the bulls have to break here. To the downside, the bears can take over. But there's a lot of indecision where this market can go next to nowhere, and there's lots of opportunity for us to be, collecting some income, but you're going to have to be pretty agile with that position and not be, crazy bullish or crazy bearish. And we could just go sideways for a little bit. So we'll see how it all shakes out. But here is the SPX. There is the Labor Day sell-off level. And here is the NASDAQ. And here is the sell-off level. So the NASDAQ with its rip, all the way back up towards that sell-off from Tuesday. And again, doesn't mean we're out of the woods yet for the NASDAQ. We could come into next week and we could still hit some resistance here on the backside of this trend line. We have a high. If we hit that resistance and then hesitate there, I could see some more indecision. All right. But we'll watch because if we break and go higher, I think this is open space. I think the NASDAQ has room to continue to melt and we'll look for all-time highs. But I want to see if price can prove it before I start to really commit and participate to that. On the Dow Jones, here's the Dow. This is an easier way to look at with my DIA. So here, go back a couple of candles. This is the Labor Day sell-off right there on September 3rd. We're not quite there, but a nice little turnaround the last couple of days to see this, rip to the upside and also closing in on that level. And realistically, not that far off from all-time highs. We are sitting here on the Dow around 1.19% from the all-time highs. Not too shabby. On the Russell, we're certainly higher from the all-time highs, which are way up here, and that would still be a potential catch-up trade that I'm interested in participating in, but it's tough. There's obviously been a lot more volatility in the small cap space. I hope that rate cuts will start to juice the Russell a little bit and maybe actually see some Russell outperforming. Today is an interesting example, right? Russell's at 1.29%, Dow at 0.66, the NASDAQ at 0.97, the SPY at 0.84, or the SPX 0.75, but the Russell actually is one of the better performers of the day. So doesn't mean we're at all-time highs, doesn't mean we're anywhere close to all-time highs, but if we continue to see some type of Russell outperformance with the broader market also going up, perhaps the SPY can throw out another, 5% gain, 6% gain, 10% gain, and the Russell can maybe squeak out, 15%, maybe 20%. We'll see. So I do want to know if the catch-up trade is still there for the Russell to maybe hit that milestone of all-time highs again, which would be for the first time since late 2021. We go into the VIX. After yesterday's big rip to the upside, volatility has been suppressed immediately, and we're settling back in towards 17, possibly settling back in towards 15 if the melt-up continues. I'm still long on SVXY, levels at 50, own shares at 40, levels at 35. I'm curious how long I hang on to this. I may close some profit up here around 58 to 60 bucks, but it's going to be a big indicator with volatility as well. Oil. We had a decent little recovery here the last couple days. I'm long on CL with the credit spread. Oil, I'm looking to see if oil will respond to these lows. This goes back into support around 2023. This goes back into some wick lows back in the 2021. Let's see if oil can stabilize. We're still making lower highs and lower lows. The bulls have a lot of catching up to do. If we're going to kind of sustain this low, then I'd be looking for some type of push to the upside. Let me take this down to a smaller time frame. Let's go to the 1 hour chart. Okay, what I am noticing on oil just recently is that we did in fact break some structure right in there. So we took out this recent high. If we have a low to high, we have a little accumulation in here. We're looking to see if oil can head higher, and that would help kind of cement this low a little bit further. I'm taking some credit spreads on CL. I'm taking some credit spreads on oil in general, USO, for example, and CL mainly. Looking to see if I can kind of nail that support level and see if I can get some credit over the next maybe 30 to 60 days. Natural gas, hopefully I'm not seeing this thing drift too much higher, but natural gas is, it's getting up there. Okay. I'd like to see this thing retest the lows, but who knows? $2, probably $1.60. I'll look to do some credit spreads in here. I'm just going to go ahead and set a chart alarm at $1.65 because I'm interested in some credit spreads at that level. Otherwise, I'm going to stay out of natural gas. I'll just focus on oil. Gold had a nice day to the upside today. Let me zoom in here. That's a nice, strong, bullish candle. There are some overbought conditions on gold. I'm not saying I'm calling the top. I'm just looking to see if we have an upward movement and we pull back a little bit. That's a good spot to look for an opportunity to stay long, stay structural with this trade. Stop losses, moving higher, moving higher, moving higher. Just continue to trail. My overall gold position is doing pretty well. My GLD is up a nice chunk. My GC positions for gold futures is up a nice chunk. And I'm just combination of owning some shares with GLD and then trading options on futures and trying to get long and stay long on gold. Silver also performing really nicely. I really like my silver position. I'm actually heavier in silver than I am in oil, and I'm trying to get silver with a nice clean breakout above 35. I still think that there's some consolidation in here, and that is fine. I've talked about this over the last couple of videos. If we see some consolidation, I will wait patiently for that breakout. If we have a breakout coming sooner than later, breakout here, any type of pullback, I'm looking to get long and try to be aggressively long in here. Now, I might take some defined risk trades. I looked at one this morning during one of my sessions, and I just didn't like the price. It was basically like I can make $100 to risk $1,000. That seems stupid, so I'm not going to do that. But overall, my SLV positions and my SI futures trades are doing pretty well. Bitcoin up towards 58, but still making lower highs and lower lows. We're hanging out right around this 38% retracement from this larger swing. I've said this for weeks now. This looks a lot like a big accumulation phase. So we have this huge trend to the upside, accumulation phase. I wouldn't be surprised if we get a bit of the technical kind of poster child of retracements. If we have like a 50% pullback to maybe even the old golden ratio at the 618 zone. If it comes a little bit deeper, okay, fine. But this area, because we had some hesitation and some clustering there, I could see this like low 40s area getting hit. But all I'm watching for is if this starts to break structure, I'm looking to see if and when we break structure. I'm looking to get long back to this range high and look to see if that long will actually take off and hit all-time highs and hopefully have that momentum behind it. So there will be, to me, some good opportunities on Bitcoin. If I can see this price action, something to the effect that I'm drawing out here, I would be looking for Bitcoin to go back up to all-time highs. And maybe this isn't by the end of the year. If it is, awesome. That's a big bonus, obviously. But if this is something into 2025 as the Fed cuts and the dollar depreciates, then Bitcoin is going to be one of those true alternatives where things can move along really nicely. Okay. Let's see if we have, let's go Ethereum for a moment. Ethereum, I'm trying to get price back above 2,800. I'm willing to take some ownership of Ethereum with an ETF. It's EETH. I still have some credit spreads on Ethereum. I'm trying to get back above 2,800. And I'm looking to see, maybe the same thing with a risk on trade and Bitcoin going up. Will Ethereum follow suit and possibly get back to these highs at 4,000? All-time highs on Ethereum are at 4,800 and change. We go into the Japanese yen, lots of volatility in the Japanese yen. I was interested in potential credit spread, but with FOMC next week on Wednesday and the Bank of Japan next week on Thursday, it's Wednesday night to Thursday. I'm not trying to step in front of anything crazy. I would not be surprised from this low to this high if the Japanese yen goes sideways, meaning we do put in a bit of a top here. The Japanese yen gets a little bit weaker, allowing the Nikkei to possibly rally to the upside. So I'm a little bit more bullish on the Nikkei, bearish on the Japanese yen right now. We've seen a lot of back and forth and a lot of volatility, and everyone's still wondering, will the other shoe drop? Will this market deleverage the Japanese yen? Will this be the big unraveling and unwinding that we saw there that middle of July into early August? I don't know. It makes some sense. I mean, if the Japanese yen continues to push higher, then that's going to put a lot of pressure on the Nikkei as well as the U.S. markets because we have something happening as far as major monetary policy shifting, with the Bank of Japan possibly being a bit more hawkish than other central banks and just being at a different phase than other central banks. We're looking at central banks for the most part are cutting rates, and the BOJ from negative to now positive and then moving up to 0.25, possibly shifting even more hawkish into like a 1% official cash rate does really reduce the incentive for a overall carry trade. And so I just want to watch this. I think with this crazy move that we saw, I wouldn't be surprised to see some indecision, and we just kind of let that marinate for maybe another month or two. But longer term, how much more weakness can we see on the Japanese yen after hitting 30 to 40 year highs or 30 to 40 year lows? I mean, the Japanese yen's been crazy weak the last couple of years. So I still think it's going to be a bit of an outlier type trade where just don't turn your back on the yen. It might be something stupid. It doesn't mean you have to trade it. You can have zero exposure and it doesn't even matter. But this is something I'm certainly watching for forex trading and for currencies because it's been wild and crazy. So for the Nikkei, same type of thing. We have this low, we have this high, we have all-time highs up here. I'm looking to see if we just have some indecision. So what I'd like to see on the Nikkei is if we come back up into these kind of range highs. I hope this isn't, and maybe this is the case. It could be this simple, but I hope this isn't the trade. Can everybody see how this would be a big flush to the downside and then a big rip to the upside? If this pulls back and breaks this high, that's a cup and handle pattern. And if we break that high, we could be going towards all-time highs on the Nikkei. Now, I hope it's not a straight line like that. And what I'd like to see is if we have some type of wave structure where we can go here, pull back, and then maybe enter one more time, and I can look to get long in here, and then try to get something all-time highs heading to those levels. But I get a chance to actually, get long at a decent level. So this area were obviously the lows from August. I would be more long-term, 6 to 12 months out, trying to get some Nikkei levels to go higher from there. Right? We did gold and silver. We did oil. Mag 7, Apple, pretty indecisive right now. Amazon ripping nicely to the upside, 187. That's pretty nice to see. I've got some covered calls on Amazon up to 210 out through September and out to January. Google is arguably a pretty good value right now. I know a lot of traders have been talking about this. It's down 23%. Um, I don't know. I think I'm just gonna wait a little bit. Google, I don't know. We'll see what happens. If Google gives me something like this, if we're up here with a pullback, maybe there's a nice little chance to get long, stop loss below, and look see if Google hits all-time highs. But to me, there's other trades that I like. Meta, fine. Meta pulls back in any type of way. Some type of broadening pattern, maybe. I'd like to see Meta stall at the highs. I'm not necessarily looking to short it, but if we come back down to these lows, fill this gap area, to me, that's a way more attractive position to get in. Microsoft, same thing. I mean, Microsoft looks like we actually have a topping pattern where this could be a left shoulder, head to neckline, right shoulder. I'm not saying that Microsoft is going down, but if we start to drift higher, then that will eliminate my analysis and it's no longer a bear pattern. But I'm still looking for an opportunity to see, can it come back down to this low? Can it come back down to this low and just be on sale? Give me a sale. I'll trade some options around it or trade some long positions. Netflix, we're sitting here near the all-time highs. If I'm watching this level and watching this level, we might end up setting up on some type of Netflix like rising wedge scenario, maybe. But same thing. I'm not necessarily looking to call tops in any of these stocks. All I'm looking for is if we struggle at these highs and come back down to lows and we break some structure, then this is a great area to get long. If I get long in the 550 zone or the 500 zone, I will have Netflix to my portfolio and probably hold it forever and just look to trade some options around the core position. But I'm hoping we get a little bit of discount. Nvidia back up towards 118, 119. I have a lot of ratio spreads down here. I wouldn't mind owning some Nvidia, but if I did, it's going to be under $80. We still have a lot of volatility here. I'm curious what SOX looks like with iShares Semiconductor, still pretty indecisive. I'm curious what SMH looks like. It's not quite the same as NVIDIA, but the space I think got really crowded. There's certainly been some profit taking in the semiconductor space, looking to go elsewhere and maybe spread out some of that risk capital. I'm looking for symmetry, perhaps around the 80 to $85 zone. I'm just going to stay patient on Nvidia, but obviously if you're heavily interested, there's opportunities to kind of buy dips and stay active and do what you want in Nvidia. But I don't know. It's had a great run. I feel like I'd be silly to just force it and chase it and trade what's mainstream when there's other opportunities elsewhere, in my opinion. Tesla is sitting at 229. I'd love to see Tesla give us something like this, where we have more indecision, but I could see the structure of a head and shoulders somewhere in here. So if we get a nice clean breakout above 280, I'm going to stay long on Tesla to all-time highs and say that's a pretty good breakout trade. Obviously, it would be nice to see a little bit more of this indecision. I can look to get long in here or put in some puts or some bull put spreads. Stay out of the way, of course. Put in some ratio spreads. There's ways to trade that. But if we get a break above 280, I'm likely getting long, and I'm going to assess the overall market, of course. But if Tesla's looking good to the upside, then off we go to the races, and hopefully all-time highs are achievable. Bonds and yields, we have the bonds down slightly. I'm still long TLT up to 103 and 105. I'm watching yields are actually up today slightly. Mortgage rates, this actually dropped for the week. It's down 0.15, but I've been watching this for the last 6 to 8 months. We actually saw a drop from 6.35 to 6.2, and with rates coming down further, maybe another 50 to 100 basis points by the end of the year, it would be pretty fantastic to see some action in the housing market where, buyers or sellers for that matter know there's going to be a little bit more moving and shaking. Financing can take place and people can look to move, and you can justify a 5.5% mortgage or a 5% mortgage as opposed to justifying that 6.5%, 7%, 7+% mortgage. So I think the housing market gets a little bit more interesting, as well as supply catching up. So that all could be a pretty good thing to have the resiliency of the housing market, especially with some of the ridiculous prices and the all-time unaffordability we've seen this year in the country. And I think more supply is good. I think the reality is we're going to see existing home sales probably continue to go down and new home sales catching up and possibly surpassing. So I think there's going to be a bit of crossover where new supply comes on the market and overtakes the existing. And everyone that's had these big equity balloons might see that, yeah, we can sell it, but we're going to have to sell it for a little bit less. And we're going to have to knock down 5K, 10K, 50K, whatever these prices are at now. But I think there's a ton of supply. Certainly depends on the market, but where I'm living, there is a ridiculous amount of supply that's coming online with major builders. I see Pulte, Toll Brothers, DR Horton, Lennar. They're everywhere, and I think if the demand is there, there's going to be a flood of new supply in the next 12 to 24 months. So that's all pretty darn good. But that does make me want to look at like a Pulte Homes. So Pulte Group here at PHM, we're sitting here near all-time highs. Lennar's NEN or LEN sitting here near all-time highs. You go to DH Horton, okay, or DR Horton, sorry, DR Horton Home Builder, sitting here near all-time highs. So is this already priced in? Right? I don't know. I mean, for me, it's hard to justify buying this right now. I'd love to see a pullback in some capacity, but we are making higher highs and higher lows. So anyway, home builders are on the list, but there's a lot of other real estate plays too. I mean, anything like XLRE, I mean, simple sector play on real estate. Look at this thing ripping. I mean, from this really nice, this is a really nice reversal pattern. I mean, look at this. This is pretty beautiful right here. So that structure right there in XLRE from, a breakout around 37.50 to current, and this still has room to run. I mean, if this thing gets to all-time highs, we still have some juice left in XLRE, where I think real estate can continue to do pretty well. So this sector, honestly, now that I say that, I think I'm going to start getting into some cash secured puts. I mean, the sector's not dirt. It's not super expensive at a, $45, sector position. I don't mind putting that in there, but of course it depends on what I get premium wise. I'm willing to take some shares and own it, but yeah, we'll see. So I don't mind that. I just I hate chasing it. But obviously I can, set some put levels where price has to come down to me, willing to take some ownership, kind of wheel my way through it. But I think we can get to all-time highs, which percentage-wise right now is still another 16% away. So from that standpoint, from a sector, I kind of like it. While home builders are trading all-time highs, that might help influence the real estate sector itself to advance, and maybe we're just kind of just getting started with this nice little support zone at 33, and then room to run up to all-time highs, and we'll go from there. So anyway, for the sake of time, spend 21 minutes. I'll let you go. Thanks for being with me and checking out my video. I will see y'all in the markets. Thanks. Bye.